Good morning and welcome to Bazaar Morning Call. I am Anuj Singhal with me, Sonia and Prashant. Well, we are in for an auspicious start to the day. It's Tuesday and everything is Mangal, as they say in market. The Nifty all set to hit 18,000. In fact, the SGX Nifty is indicating that the start itself could be above the 18,000 mark. The dollar index has retreated to 108. Not as if 110 was hurting us, but the market will take 108, of course, with both hands. And global cues clearly supportive of equities. Big question is not just for the day, but from here on, can by Diwali we hit new all-time highs? Prashant, Sonia, hi, good morning.
Hi, morning Anuj, morning Prashant. So, I mean, it's going to be an early Diwali for sure, right? If it's not already for the market. I mean, that's been the kind of momentum that we've had. As you said, it was great going for the US markets as well overnight. You had the Dow, which was up almost 230 points. And this is 4 straight days of gains that we've seen in the US markets. All eyes will, of course, be on the inflation data that comes out today. It's the last data point before the Fed meeting. But I think for now it's priced in. There's expected to be no major change in inflation, and a 75 basis points Fed rate hike has been priced into most risky assets across the globe, and ours is no different. For our own market, though, it's been solid money that's come in from FIs. 2 days running now, over 2,000 crores in the cash markets. DIs have sold a tad bit, and in the last 7 trading sessions, the FIIs have pumped in almost 6,000 crores. So the money is coming in thick and fast. And we were covering this on our show, Editors Roundtable, as well last week, where we talked about how the Nifty has outperformed the global markets in a big way. Up until now, the Nifty is up almost 3.5%, while most markets are seeing double-digit losses, and for a variety of reasons, purely being macro-led and an improvement in corporate profitability as well. So, Anuj, generally bull markets are based on an improvement in earnings, and that's perhaps what you're seeing play out in our markets too. Structural uptrend, which is based on an improvement in macros. Specifically, I'm talking about India.
Even if it's not about the macros, Sonia, it's all about FOMO. Look, there's still a denial. A lot of people still can't believe the Nifty is at 18,000. And they can't believe it because they did not participate in it. A lot of crowd has missed out on this rally. And any call for correction is now actually hope for correction. Everyone wants a fancy little correction to get in. And this is a market which is not giving you that. It's a market in which you're making money if you're sitting, not doing anything. Because look, yesterday, for example, in the second half, you may have felt, oh, the market's not doing anything in the last 1 hour. I bought and the market's not going anywhere. But the market will reward you this morning. So if you have been in this market, this is the market which is rewarding you for that. For me, the key data point to watch now is what happens to FII shorts, because we have started to see some signs of short covering. Yesterday, for example, almost 10,000 shorts were covered if you were to add the longs and deduct the shorts over there. But the FI shorts are still at 75%. I don't know why we still have such a heavily shorted market, and the net contracts on the short side are still at 66,000. Now, what might happen today is you may open above 18,000. The algo trades might see some profit taking, but then after that, there might be a second move above 18,000. And if you sustain above 18,000 in that second move, then you see perhaps even bigger short covering, because these shorts then have to cover. And what makes me so confident about the market moving on even from 18,000 is the fact that the laggards have started to participate without impacting the leaders. IT, I've been talking about it for 2 days now. In fact, yesterday also I made this point. That's a catch-up trade which is on for IT along with banks. And IT index, just to get to its 200-day moving average, just a mean reversion trade, which happens in the market all the time, needs to rally 11% just to get to its 200-day moving average. That's the oversold nature of this index. And of course, the bank Nifty is within 3% of all-time high, and that perhaps looks like could be the first big index to get there. I think the other point that I'm making, and despite the quality of rally being a bit suspect, the next round of rally could actually belong to small caps. Because if you look at the indices, the mid-cap index has moved within 2.7% of all-time high, but the small-cap index is still about 16 or 17% away from its all-time highs. So that could be the area to focus on, small caps, cash stocks. Of course, all of this depending on the fact that if there's a downside, the 20-day exponential moving average, which is rising now, that holds. That's been holding. You had that test last week, and the market sort of defended that 17,600 is that level that is working. Prashant, hi, morning. What do you have for us?
I mean, so you covered local. Let me just cast a quick glance on the global. And I think the one data point is the US inflation number. This is the last step, sort of stop on the way before we get to the 21st September FOMC meeting. So very briefly, why does this matter? It doesn't matter for the 21st meeting because irrespective of what this number is, it's likely that we'll get a 75 basis point hike. But it matters for post-September FOMC pricing. What will happen in the November meeting, what will happen in the December meeting of the Fed after what we see in September. Now, investors have been discussing the fact that, inflation numbers will cool off for some time now. And this number in that sense will tell us whether it's actually happening or not. Markets have also kind of positioned for this. Dollar has been weakening. It's not been going up. Equities have rallied a little bit. I mean, rates have not cooled off. Rates are still high. But the other two legs of the market, equities and the dollar, they've done quite well. Now, what should you watch out for? A 0.2% sort of month-on-month rise in core inflation would reinforce USD weakness, dollar weakness, which is essentially what you want. You want the dollar lower, not higher. A 0.4% month-on-month core reading could boost the dollar. Now, I would say that even if you get, by the way, the consensus is expecting about a 0.3% rise month-on-month. So 0.2 would sort of reinforce the downside, 0.4 would be slightly higher. But I would say even if it is 0.4, which is the fact that it slightly overshoots what the expectations is, the US perhaps has just about started another leg of bounce. I'm talking about equities in particular. I don't know if rates will cool off as well. We'll have to see. So far, they have not. The dollar has. But I think equities, after 3 weeks of being down, last week bounced about 4%. So while markets like India, actually there has only been one market, the Indian market, which has kind of been going the other way, while the rest of the global market has gone the other way. US has started, it's perhaps at the initial stages of a little bit of a bounce, which can get to about 4,300 on the S&P, etc. So, there may be a little bit of pause going into the CPI number, but I think unless and until there is a big blowout number of which there is no real expectation, things may continue to move on and the global picture may remain supportive. It's not really meant that much whether it's supportive or non-supportive for India, but I mean, supportive does not hurt at all in that sense. So we'll watch the space closely, watch the dollar reaction, and I think the equity reaction follows after that. Sonia.
Absolutely. For our own markets, you can argue, of course, that is this a start of a new bull market, etc. But in the US markets, there's still a lot of caution, right? Yeah. People are calling this a bear market rally, the 4 straight days of gains, because they are perhaps heading into recession. There are concerns there. It's a very different picture for the Indian market.